Good day friends. In the lecture series on financial markets and institutions, in my previous lecture I talked about various financial services that constitutes the financial markets and the various financial intermediaries, the components of the financial system. And a very important component of the financial system is financial regulators. If you want that your financial markets, financial services should grow, the economy should grow, then you need some regulator who regulates your financial market, which regulates your capital market, which regulates your money market, which regulates the whole financial system in the country. And for that purpose, the financial regulators are required. Financial regulators are like the law of the land. If I say, put in very layman language, a country has its own laws, right? The country is being run on the basis of rules and regulations. Similarly, financial markets or the whole financial systems will be strengthened if there are financial regulations, and every institutions, every organization which are the part and the parcel of the financial system is being regulated by rules and regulation, which works in the best interest of the investors, in the best interest of the lenders, in the best interest of the borrowers. With this spirit, the spirit of the growth of the system, with the spirit of the rules and regulation, there are various financial regulators that are there for different work in the country. Just to give you an example to start with, like RBI. The moment when we talk of RBI, what is RBI? We say it's a banker's bank, which is the government banker, which provide banking services to the government of India. Not only it provides banking services to the government of India, but RBI regulates the whole monetary system in the country. All the banks that are being operating in this country, whether private banks, whether the commercial, whether the public sector banks, the foreign banks, the regional banks, these all banks are being regulated by the Reserve Bank of India. So the RBI is the regulator of monetary market, right? So financial regulations have the prime responsibility to monitor the market. When I use the word monitor doesn't mean in the negative sense. Monitor means that the system works as per the rules and regulations in the best interest of the investors as well as the borrower. So Indian financial system is regulated by independent regulators affiliated with the fields of banking, insurance, capital market, commodity market and pension funds. Means the different systems of the financial systems are being regulated by different regulators, and all these regulators themselves also coordinate with the government of India, and within the overall purview means you will ask, if you ask me which is the most powerful regulator, I would say the government of India is the most powerful regulator, because government of India makes the broad outlines, the finance ministry, the Ministry of Commerce and all those ministries, right? They makes the broad guidelines under which these different regulators works within the parameters of the parameters that is being given to them. Indian government plays a crucial role in controlling the financial system and also in influencing the role of financial regulators, which I just said. If you want to make a list of the financial regulator, I'll say these are the broad financial regulators like Reserve Bank of India. I just said the whole banking system in this country, whether private banks, the public sector banks, the foreign banks, regional banks, the whole monetary system is being regulated by the Reserve Bank of India. The Reserve Bank of India is the banker's bank. Similarly, the whole capital market is being regulated by Securities and Exchange Board of India. In my previous lecture, I talked about various financial services. All these financial services, whether you talk of merchant banking, whether you talk of the investment banking, you talk of the book building, and different financial services, the capital market, the stock market, BSC, NSC, NSDL, CDSL, different depository services, I mean to say different stock exchanges, all these are being regulated by the Securities and Exchange Board of India, right? That is, the whole capital market is being regulated by the Securities and Exchange Board of India. Similarly, like in the foreign countries, like in the developed countries, we in India also have very large sum of money, very large, I am saying, I cannot giving you any figure exactly at this time, is in the form of pension fund, right? There are different agencies which take care of the pension funds. So for regulating the pension funds, there is an agency in this country popularly known as PFRDA, that is Pension Fund Regulatory and Development Authority. Similarly, the insurance sector in this country is expanding at a very fast rate, right? There was a time in India when there were only national insurance companies like LIC, General Insurance, Oriental Insurance, like these. But there are many private insurance companies in this country at present. And the scope of the insurance is expanding at a very fast rate. If you ask me, I mean, there is a very large scope of increasing the insurance sector in this country. Means insurance sector still in India is underpenetrated, right? There is a scope of expanding the insurance sector in this country. But the people will trust, people will make the insurance policy if they believe that whatever the insurance company is saying, they will fulfill their promises. So for that purpose, there is an Insurance Regulatory and Development Authority of India. All these insurance companies which operate, whether in the health insurance, whether in the life insurance or in the general insurance, means whether it is marine insurance, whether it is a fire insurance, all types of different insurance are being regulated by IRDAI, that is Insurance Regulatory and Development Authority of India. So these are some of the regulators. At this moment, I am not discussing in detail, right? Basically, I am talking about, I have just mentioned that these are the regulators and their area of scope, their scope of work. That is, there is a Bank of India, regulates the monetary system, that is, regulates the banks. The capital market is being regulated by SEBI. The pension funds is being regulated by the PFRDA. The insurance sector is being regulated by the IRDA. We will have a separate discussion on each of these agencies in separate lecture. So now, after talking of the components of the financial systems and the regulators, now let me talk of the features of the financial system. Means when I talk of the features, indirectly and directly, I am also talking about the importance of the financial system, you may say benefits. We can talk separately benefits, but these are also the benefits, the features, I mean the importance of the financial system broadly. Say, financial system encourages savings. How the savings is being encouraged by the financial system? Because the very first thing is, when you save the money, why should you save it? You should save it so that it can act as an asset, store of value. What is the main important role? You must have read in economics, you must have read somewhere in economics that the basic function of money is not only the medium of exchange, money is being used as a medium of exchange, but another important function of money is store of value. It can store it, the money can be stored as a value. You have something worthwhile which you can store, right? So if I am saving today, after 2 years, after 3 years, it must have some value, right? And this value should not depreciate. The purchasing power of that money should not depreciate. So as all of us know that inflation takes place on a regular basis throughout the world. In some countries, the inflation takes place at a slower rate. In some countries, inflation takes at a higher rate. But inflation is a general phenomenon. So in a situation where the inflation is a general phenomenon, people will save the money when they can keep it as a store of value in some financial instruments or some other instruments form. where their money can be stored, right? So that say for example, there is a instrument in the financial instruments that is called bank deposits, put it simply. In the bank deposits, you get interest on it. So every year the bank, your money increases, right? You deposit the money, your money will increase. Why you will save the money? You are saving the money so that you can invest this money in a bank where your money will grow. As the inflation takes place, the value of your money will not fall, right? So if you have this belief, then you will encourage to save. Otherwise, you will spend all your income. So we say financial system helps in encouraging savings. So financial system motivates savings by offering a broad range of financial instruments as store of value. These instruments may be in form of shares, it may be in form of deposits, means debentures, it may be in form of bank deposit, it may be in form of commercial deposits, means the deposit which you make in the companies. There are a whole host of financial instruments which we also talked about in our previous lectures, that through these financial instruments, because the financial markets offer these financial instruments and the value of these financial instruments increases over a period of time. That's why people are encouraged to save the money. My simple point is that the financial market offers the different instruments, and these instruments, the value of these instruments grow over a period of time. That's why people are encouraged to save the money. So these savings have a circular effect. As and when investors grow their assets and wealth, means if you invest in these assets, in these financial instruments, their assets will grow, their wealth will increase. So they typically contribute to economic development. So it will not only encourage saving, but also it will help in economic development. Saving mobilization. See, saving is one thing. If I and you save the money and it remains with us in our pockets, in our home, it will be of no use. Financial system, financial markets helps in mobilizing the saving. How to help in mobilizing the saving? That when I know that somebody is there to invest this money on my behalf, so then, and I have trust in that institution which is investing that money. Say for example, I'm depositing my 1 lakh rupees of my saving in a mutual fund. So mutual fund is offering me the service which it is ready to provide, that it will invest this money on my behalf, and this money will grow over a period of time. So in this way, what is the role of the mutual fund? Mutual fund is mobilizing the saving from individuals, and by getting this money from individuals, it is investing in the companies which needs money, right? So in this way, financial systems helps in mobilizing the saving. So savings are done by a large number of household and firms. That could be in the small or large amount, short term or long term. I can save for a small period of time, I can save for the long period of time. Some money is being saved, say for example, I want to buy a car after 3 years. So for this 3 years I am making the saving. So this financial system of financial services, or a whole host of the financial system, the financial markets, the capital market, the money market, they will provide me the opportunity to save my money, and these institutions will take my money, invest in a productive asset, right? So this is basically how the mobilizing of the savings take place. So means different individuals, different firms save for different period of time, they save in different amount. It gives savers the choice of different investment and thus helps in channelizing surplus fund into most productive use. This leads to increase in production process, which increases standard of living of the people. Means these institutions mobilizing, what do you mean by mobilizing? Mobilizing simply means collecting the saving and putting it to productive use, right? So we say whole investment process is savings, mobilizing of the saving, and then investing. And this capital formation process is being played by or being performed by the financial system, financial organizations in the country. Then comes, Then means these are not in order, but I am talking of different features of the importance of the financial systems. Allocation of funds. Another important function of a financial system is to allocate funds in an efficient, smooth, steady and socially equitable manner. Since long, the financing by individual bankers and moneylenders have been highly unorganized. However, modern financial institutions, markets and instruments are now organized and play a significant role in the credit provisions. Allocation of funds means how the funds will be allocated, how the funds will be judiciously used. These money lenders, indigenous Mahajans, which were there prevalent which were prevalent largely in Indian markets, they were basically, their concern was their interest. Their concern was that some needy people used to come with, say, for example, gold. They used to deposit that gold and offer the money. They need money for their social occasions, for various other occasions, right? So whether the money is being used for productive purposes or what is the requirement, they were not concerned with it, and they used to charge very exorbitant rate of interest. But with organized financial markets, with organized system, the funds are being allocated in a judicious manner and the money is being used for productive purposes by and large. Even if it is used, I am not saying that the bankers and other agencies do not give money for consumption purposes. They do provide, but they see what is the credit, is the person will able to repay the money, right? Whether the person has the enough income. I want to buy a car. So the banking system will see to it that whether my income is sufficient to pay for my car, the monthly installment EMI, then only the money will be given to me, either personal loan form or in any form, right? So it means the fund is being allocated judiciously by the financial system. Credit payment system. What is this payment system? A very large sum of business, a very large business is being conducted on credit basis, right? And not only the business is being done on a credit basis, no business in this country can, means when I am saying no means by and large I am generalizing, especially business at very large scale, is being done on its own equity capital or owned capital, right? The business is being done on credit basis. A very large sum of money is being in the leverage form in the credit businesses. So for having a large scale of credit business, you need institutions, you need system where credit payment is being done in a transparent manner. So financial institutions, service providers creates an efficient and seamless process that allows merchant bankers and businesses to send and receive money in exchange for product and services. Not only nationally but internationally. Suppose I am importing some goods, right? And I am importing goods in terms of, say, Indian rupees, 100 crore rupees. Importer may be knowing to me, the exporter may be knowing to me personally, it may not be knowing to me, right? What is being done? Through banking system, the goods will lend to the port, the exporter will send me the papers, right? Through the banks, I'll make the payment and then I'll able to get my goods. So this payment system is being facilitated by the banks. Similarly, say for example, these days even you and I, when we go to the market, we don't carry cash. We carry credit cards, we carry checkbooks, we make payments through UPI. India, throughout the world, India is the largest user of UPI system in the world. I'm not talking of India, I'm talking of the whole of the world. India is the largest developed UPI system, payment system. What is this? This is nothing but the financial system, that we are able to develop good financial system where payment system is being facilitated through credit card, through checks, not only in the local market, through international markets, right? So the financial system creates an efficient payment system so that both the parties have trust in each other. Provides liquidity. For any investment, I want that when I need money, I should get the money. And how the liquidity will be provided in the system? This financial system, like say for example, again let me give the example of equity market. I buy the shares of a particular company, but if I want to sell it, where will I sell? How will I find that who is interested in buying? If this is a country of 140 crore people, how will I find who wants to buy these shares? It will be very difficult for me in the absence of the stock exchanges. So what the stock exchange is doing? They are providing liquidity services. They are providing me a platform. They are providing me a market where at any point of time, through my stockbroker, which is again a part of the financial system, I will able to sell my shares, because there are buyers, there are sellers, and the job of the stock market, that is, if the two stock markets, if I talk of the stock markets in India, BSE and NSE, right? They act as a market where buyers and sellers meet each other through stockbrokers, right? And these stockbrokers will help in getting the meeting of the buyers and the sellers, these stock exchanges and the brokers, right? So any point of time on any working day, if I want to convert my share into cash, when I use the word cash means including banks, when the bank money, so I can sell it, right? So these financial systems helps in providing the liquidity to the system. Why do I make deposits in the bank? Why do I make deposit in the saving fund, in the fixed deposits? Because I know it, that when I will be needing the money, I can get the money back, right? Or I can transfer this money through check. I can withdraw the cash if it is in my saving fund. Even if I have fixed deposits, I have made fixed deposit with certain conditions, bank allows me to withdraw the money if I need the money. So in this way, the liquidity is being provided by the financial system. Not only the stocks and the bank deposits, even gold, even other financial assets, right? So there are the commodity market, MCX, you must have NCDEX. There are exchanges of which provides buying, purchase and sale of the commodities in the country, if I am talking in the Indian context, right? So these markets provide the liquidity if you want to sell some commodity, if you want to buy this commodity, right? So they provide the liquidity, you can sell it in the market. So it provides an investor with an opportunity to convert their investment into cash whenever required. For instance, selling of stocks and bonds in the financial markets. Liquidity also contribute to the system's stability and make it less prone to financial crisis, because there is enough liquidity in the system, right? So it will provide the stability in the system also, right? So friends, these are the various features, I would say, the importance, the functions. I can talk of other things, but these are the broad features of the financial system in the country. Now, after talking of the feature, let me briefly talk about the evolution of the Indian financial system. I'll be talking the evolution in detail in my next lecture, but at this moment, let me introduce the topic. How over a period of time, the Indian financial system has evolved, right? Broadly speaking, the financial system can be categorized on, can be bifurcated in three different phases. The first phase, I'll put it before independence, or before 1951. If not independence, means 1950 up to 1950, 51, whatever you call it, right? In the second is post-independence phase up till the 1990s, not I'll say even 80s, I'll say 1990, when the liberalization in the country took place. And third phase, which is the most significant phase, where the financial markets, the financial systems grew at a very fast rate, is post-1990 era, right? So these are the three broad phases of Indian financial system. Because why we are studying the phases of financial system? Because we learn a lot from the history. Whatever the mistakes we have done in the past, we try to resolve it, we try to overcome those. So for that purpose, we must know that how the Indian financial system has evolved over a period of time, right? So if I talk of the pre-independence era, I mean, that time the Indian financial system was very, very, I would say, small, right? The equity market was not very highly developed. Most of the people used to keep the gold in the physical form, and gold and the I would say the real estate were the two assets which people used to in the save, right? There are very developed, I would say, unorganized market. When I'm saying, you may say these are contradictory. Developed means that unorganized was large scale prevalent in the country, which used to exploit the users of the money. So this way, the pre-independence era, was not considered to be a very good time for the at least Indian financial system in that sense. So we'll be talking the financial system, how the financial system has evolved, right, over a period of time, all these three phases in the my next lecture. So this is for today. Thank you very much.